Back to Market on Close. Let's take a look at some options flows. Mr. Kevin Green checking out the levels into the last 25 minutes here. Been quite a battle today, KG. Where's all the action taking place?
Really, it's where we're at right now. I think this is going to be the make or break point for us going into the close here, Oliver. If we look at the volume chart here for today, you can actually see a pretty interesting development taking place. Obviously, we kind of talked about it earlier this morning. 5750 was going to be an area of resistance. We opened up higher than that, and it's always really difficult to try to maintain that level unless we have some really decent economic data in order to kind of push us through. But now we're kind of forming a little bit of an inverse head and shoulders. We already made the left side of this shoulder earlier this morning, and then we had the head of this, which pretty much came down to that 5720 area, which we kind of highlighted earlier this morning, where we had some buyers coming in, and now we have been testing this neckline, which is sitting at around 5747, and now it does appear that we might be trying to form the right side of that shoulder. And if that's going to be the case, you really want to be able to hold that 5730 area, bounce right off of that, and then try to move higher here. We do have a balance area at around 5742, so that's where dealers are going to be net even on the session. That's an estimate here, and I would suspect that we probably will still see an area of resistance at 5750. In fact, we actually had some decent flows actually happening here today, and they weren't really that positive to the upside when you're looking at calls that are being sold against the market here. We actually saw the 5760 calls getting hit for the December monthly expiration. That was around $6.8 million worth of premium coming in. Also, the December monthly 5740 calls, that was around 10 million in premium here. So basically what it's saying is somebody's really structuring in for at-the-money calls or selling at-the-money calls. And if you're collaring a portfolio, that's traditionally not something you would do. You would want to go higher up, maybe hitting that 5,800 level, maybe 5,850. But this individual is continuing to layer in. They actually just had another order that just came through on the screen here. Continues to layer in at the money or the 5750 area-ish. So that new positioning is actually going to probably make that gamma wall a little bit harder to break in the near term.
Okay. So we've found a little bit of pushback here, but at least we explored above. We know it's possible to venture there. Seems like it's reasonable to try and take another stab at some point.
Yeah, definitely. I mean, if we do have a favorable PCE print too, we could actually have a move to the upside. Just because we highlight these levels doesn't mean that they cannot be broken, right? Rules are meant to be broken every once in a while, and that's what happens with the market. You try to break to the upside and really try to create this kind of domino effect or just this excessive buying pressure to the upside if we are able to break. We just did not have that this morning. We just didn't have the strength, the volume in order to really maintain those levels. And then obviously there's a lot of things that are happening in the market here today. I would say just be cautious. You know, that 5720, we did see a nice little bounce off that area, but I was kind of surprised the velocity of us getting down there and kind of how long we kind of stayed around 57, let's say 5730, 5725 before we tried to flush and then started getting buyers back in. So still, once again, a bullish trend overall when you're looking at the daily chart, even over the last couple of trading sessions here, but it seems like we're trying to get that additional information to push us higher, and Micron just was not able to do it for us today on a bigger scale. I mean, we still may have a positive day on the session, but not as grandiose as we saw earlier this morning.
Okay. All right. Thinking about volatility, it seems like market generally kind of wants to push VIX lower, but then today we get a pop on some of the back and forth. Can we get VIX to stabilize or even creep higher in an up market if it gets, a little bit frothier, if it gets a little bit choppier?
Yeah, I mean, that might be the indication of a frothy market in general. So if we have an up market where we continue to just make new highs, one of those days where it's really hard to see a red candle on the screen and you see the VIX kind of moving up, that also could indicate that there's excessive buying pressure happening with the out-of-the-money calls, which is kind of skewing the VIX. I would say the move in the VIX today, I mean, it's not surprising both to the upside or downside. I'm not really too concerned about it. Actually, I still believe it's relatively low on a seasonal basis. And if you kind of go out on the curve, we did see a little bit more of a bump to the upside there. So the normalization of the curve is still intact. No backwardation right now. But once again, I think we're just going to have that economic data point, and tomorrow can be that catalyst for us to break. Now, unfortunately, too, if you go on the other side of that, let's say we do actually have a pretty hot print for whatever reason. It's not likely, but for whatever reason, we have a hot print for PCE. I feel like the breakdown in the market could be fairly dramatic. So hopefully, it's either meeting the expectations expectations or better than expectations in order for us to either sustain these levels or to try to push higher.
Okay. Hey, KG, last thing real quick. We talked earlier this week about the expiration for the weekly tomorrow versus the monthly next week on Monday. Where are you seeing generally the kind of favorite expiries and most of the volume happen?
I mean, most of the volume still happens on 0DT. It's still around 60% of the total S&P 500 options flow taking place. Now, Friday is probably going to get the commanding share of the volume, but we have to just be mindful of that Monday quarterly expiration for the S&P, that monthly quarterly, right? The quarterly expiration for the S&P, just because of that that JPM collar that's sitting there. So open interest wise, they might be balanced out, 50-50, but I would expect more volume on the Friday expiration rather than the Monday. What will be interesting, Oliver, is the new strike price for the JP Morgan collar. So it usually looks at the out of the money puts and out of the money calls, 5% to the upside, 5% to the downside. And if we're looking at these current levels right now, that would probably put that short call for that JPM collar sitting at around 6,025 to 6,030. And that would be for the month quarterly expiration for December. When we mean quarterly, we mean end of month for December. If we have another month like we did, or a quarter like we did this time, I mean, SPX 6,000 could be on the horizon. We're not, I'm not making that call, but we've been fairly consistent with hitting the upper end of that collar position on a quarterly basis here over the last couple of quarters at least.
Okay, good stuff. Good perspective. Thanks, KG. Seems like we still have the momentum behind us, and we've been able to continue to press, even if we get rejected. Try again. Taking shots on goal like we talked about yesterday. So we took a pretty big shot today, and it kind of bounced off a little bit. It was like kind of one of those that went in and came back out. Thanks, Kevin.